So I'm opening up an Excel sheet. So let me know if you can see the Excel sheet, your regime final salary format. So just open this along with me. I shared this sheet in the morning. Can you see the sheet, Pranav? Okay. So today we are going to talk about. So we have done as I told you last time, that was yesterday, that there will be 6 questions in your end term paper. 3 questions we have already done. Two will be from GST and one from the topic which we have just finished, which is residential status and scope of income. So there will be a question on that. So the video which I have uploaded today, you can just watch. There will be a question of similar type in your exam. Okay, so now there is something called income from salary. Okay, when you start working in a company, you start getting salary. Okay, so you need to pay taxes on the income which you earn as salary. So today we are going to talk about income under the head salaries. So there are two ways. One is under the new regime, another is under the old regime. So if you select a new regime, you have to pay tax. Under the old regime also you have to pay the tax, but then you have to choose which is more beneficial. Okay, as I told you, new regime, the taxes are less, the slab rates are wide, and but there are no deductions. But in old regime, you get all the deductions. Okay, so let's talk about this. So Pranav, can you see that? So just read line by one, line by line. Okay, then I'll explain. First, what is the line? Okay, so basically, when you earn in a when you start working in a company, they'll fix a salary. Okay, so which can be, like, say for example, 50,000 rupees a month or a lakh of rupees per month. Okay, so in that case, it will be, say for example, 12 lakh salary. Okay, fine. So I can just put a comma. I'm just giving an hypothetical example here. Okay, so your salary will be 12 lakhs, 1 lakh rupees per month. Okay, what is the second item? Now, this is basically many companies, like government companies, they give a DNS allowance. But in private companies, they also give an allowance, but they may call it by different name. It is always linked to inflation. Now, every year, the inflation is happening to the tune of about 5 or 6 or 7 or 8%, okay, or whatever percentage. So the company can increase your salary by that percentage, okay. So that is called DNS allowance. Like, when I was working in a company called Balarpur Industries long back, they used to call COLA, which is cost of living index, something like that. So, we should used to get, we used to always wait, what is the COLA for this year? That means how much percentage it has gone up. So there will be a DNS allowance. Suppose the DNS happens to be, say, 25,000 rupees per month. So it will be 3 lakh rupees per annum. Okay. So it will be added to your salary. So your salary will become 15 lakhs. Okay. Then there is the third item, Pranav. Now, when you're working in a company, you may get bonus, a performance bonus, or a commission on the sales. If you're a sales guy, then whatever business you bring to the company, they give you some commission. Okay. Similarly, if you're a director, you may also earn a commission on the company's net profits. Okay. Or even in employees, they get a bonus based on how much the company has performed. So you may get some amount. Suppose it comes to, for you in this your case, it comes to say 5 lakhs for that year. Okay, fine. Then this is we have seen that basic DNS allowance bonus is totaling to 20 lakh rupees of your salary. Then Pranav, third amount. Now, there are lots of perquisites which, a person may get. Okay. You may be entitled for a car. Company can give you a chauffeur-driven car. Okay. Like, when I was working, so for many years, I had got a car from the company, where the driver was also given by the company. Okay. So I don't have to pay anything. So there has to be some calculation through on which, some amount of will be added to my salary. Okay. So there are various methods under the Income Tax Act where they have defined how we are going to work out the perquisites. Okay. So which we are going to, I'm not covering that at the moment. Fine. So we will maybe covering in the next class. So even it can be, an accommodation given to you. Like, the government employees, they get accommodation. Okay. Similarly, a private company can also give you a house which is owned by them, a free of this thing, a free house to you. So again, a perquisite value has to be added. Suppose it comes to about 6 lakh rupees in your case. Suppose you're given a house, which is almost like 50,000 rupees per month. So they're not charging from you. Suppose the perquisite value is 6 lakhs of a house or a car. So you're going some money will be added. This money is not coming to you, but it is coming in form of some perquisite, either a free house or a motor car or a driver. So you need to calculate what is the amount of perquisite you're getting. So there are rules under the income tax where we calculate the perquisite value. Then there can be the fifth one. Now, there can be allowances because this we are talking about new regime. All the allowances are fully taxable. Under the old regime, you may get some exemption. Like suppose you're working in a company and company gives you instead of giving a house, it says that we will give you a house rent allowance. Okay, so that some allowance will be given so that you can take a house and rent yourself. Okay, suppose the company is giving you say a 50,000 rupees or 60,000 rupees rent per month. Okay, so that you can choose your own house and pay whatever amount you want. Either you want to pay 50,000 or 60,000 or 70,000, it all depends upon you. So they will give you some allowance. Okay, so suppose that comes to 7,20,000, which is 60,000 rupees per month. So that means your gross salary will be how much, Pranav? So you can just divide and see, okay, and just as you're saying, so it is like 2,76,000 something, 2,80,000, okay. So this is the salary what you're getting. So this all will you have to every year whatever salary you're getting, you're going to make a total of that and work out what is your gross salary. So you have to make a computation, how much income tax you have to pay. Now there are certain exemptions which are allowed. Now there are very few exemptions which are allowed when you are under the new regime because there are hardly any deductions. But some deductions like the read this deduction B part. Just read this. Okay. Now, 115 BAC means the new regime. That's a section. Okay. The section under which we pay tax under the new regime is called Section 115 BAC. Now, you don't have to remember that, but for a purpose that it is coming under this section. So, under this section, if you are a specially abled person, okay, you are handicapped, then you may get some exemption. So, this is only for very few cases where you get exemption. Now, some exemptions are given which is in lieu of a transportation allowance. Like suppose the company is giving you some transportation allowance. They're giving you some say 10,000 or 15,000 rupees for coming to the office. So per month, so that allowance may get exempt only in the case when you are a specially abled person. Okay. Then so after that you calculate the net this thing. Suppose you are a normal person, then you will not get any deduction. So your net salary will be the same as gross salary. Is that okay, Pranav? Then you have to add income from other sources. If you have declared those that income. So I'm just deducting this income from other sources. Like suppose you are owning a house and you have given it on a rent. So income from rent, income from house property, income from capital gains, income from interest on bank deposits or something like that. So any other income you have to mention here. Suppose you don't have any other income, okay, fine. Or maybe that you have a bank account on which you are getting some interest. Suppose you have got an interest to the tune of say 5,000 rupees on your bank interest. Okay, so in that case, this will be added here. Fine. So your income will come to 33 lakh 25,000. So this is we can say bank interest. So you have a bank on which you have parked your money and you're getting some interest. Okay, so that will be added. So this is from other sources. So here we have to write actually income from other sources. So this will be coming under income from other sources. Fine. So where you can write that this is coming from a saving bank account, saving bank or a fixed deposit. So whatever you have taken from the bank and bank is giving you some interest. So you have to declare that and pay tax. Now, under the new regime, there is no exemption, even if you get some bank interest, because in the old regime, you get an exemption up to 10,000 rupees. Okay. Now, this is your income. Then uh, read this. This is gross total. How much is the gross total income? Now, from this, you get some deductions under section 16, okay, which is standard deduction. So all persons who are working in India, they get a maximum amount of deduction, which is 50,000 rupees. Okay, so it can be maximum 50,000. Okay, so it can be even less in case if your salary is below 50,000. Then if this figure is below 50,000, then it will be 50,000. Okay, otherwise this is the maximum deduction you get. Okay, so then your salary will be in that case will be 32 lakhs 75,000. Okay, so this is your income, and then you have to pay tax on that. Is it clear? Any questions, Pranav? Okay, now this is under the new regime. So, suppose you are under the old regime and you don't want to pay tax under the new regime, so your computation will be slightly different. Okay, so how it will be? So you have to again enter your basic salary, DNS allowance, bonus, perquisite, then house rent allowance, leave travel allowance. These are exempt. If you get a house rent allowance and you pay rent, if you stay in a rented accommodation, and you will get some deduction. Okay, so we will talk about later. Okay, so there are HRA rules here, so we're going to talk about HRA rules a little later. So whatever rent allowance you are getting, if you're staying in a rented accommodation, then you don't have to pay tax on the entire amount. Okay, so whatever you're paying rent, you will get a deduction for that. Then leave travel allowance. Let's read this. What are these? Up to seven. Okay. Now, there is HRA, as I told you, that you are entitled for an house rent allowance, which is basically the company pays you some amounts, per month, and you can basically either stay in a rented accommodation, or even if you get this amount and you stay in your own accommodation, it's fine. So entire thing will be taxable. Okay, you will not get any deduction. Suppose you are getting some amount of HRA, but you are staying in your family house and you're not paying any tax, any rent, then you will not, entire HRA will become taxable. But if you are staying in a rented accommodation and you are paying some amount of rent and you are also get an HRA from your employer, then all the HRA will not become taxable. Maybe that it will get taxable, or it may get partially taxable. Okay. Then the sixth one is what, Pranav? Now companies every year may give you an LTA, which is called leave travel allowance. That means the company always says that you can just go around and spend some time, take some leave, and go with your family, and we will give you some money. And that money is called leave travel allowance. I mean, all companies, whether they are private or whether they are government, they give you leave travel allowance. Now, under the old regime, this leave travel allowance, if you are spending this money, okay, as per the rules of the income tax, then whatever LTA you get, it becomes exempt. Okay. Now, but there are some limitations that you can travel by, either by travel, by air or rail, by, and then only the air travel and railway travel are allowed. But your stay home, hotel accommodations and everything, whatever you spend, that is not allowed. Only the traveling expenses, up to the traveling expenses, and you have to submit your tickets. And if you submit your tickets, then in every 4 years, two times you are allowed. Okay, so that means you will get LTA every year, but only for 2 years you can avail this exemption. Okay, not for all 4 years. So there is a rule for that. Okay, so we are not touching at the rule at the moment. I'm just telling you something about that. So this will become gross sell. Then we have some exemptions like HRA exemption. So read this, and then you get the net salary. Okay. So that means if you are in the old regime, if you are staying in a rented accommodation, then there will be some HRA exemption. But in the new regime, it is not available. Similarly, in the old regime, if you have spent the money on your travel, all your ticket charges, which is air travel or your railway ticket or a bus ticket, this will you will get exemption on that basis if you are submitting those bills. Okay, so these are the total exemption, the net salary. Then read this gross total income, and okay, we are not touching this 17 to 73. So total deduction. So you get what deductions you get? Standard deduction under section 16. The same as you're getting under the new regime, you're getting here also. How much amount? 50,000. Now, if you are a government employee, you may get a entertainment allowance deduction also. This maximum limit is 5,000 rupees, a very small amount. Then you have to pay some professional tax every month to the government. So that is also exempt. So you can put this amount here. Okay. So total deductions. So income under the head salary. So if you have income from any other head, like suppose you have a bank interest income from other sources, you have to add here. So then it becomes gross total income. Is that okay? Pranav? Any questions from any students so far? Okay, so this is gross total income. So you can always, we will do a question so that, whatever I'm talking about, it will get cleared. Okay. Then you are entitled from some deductions. So read this. Let's. Okay. Now all these deductions, government don't want to give all these deductions now. So that's why they have come with new scheme. Okay. New regime. So all these deductions will be gradually be phased out. Okay. So, but today, the any person in India, he is entitled to these deductions if he chooses the old regime. Okay, the default is the new regime. So in case if you want to take the benefit of all these sections, then you have to make file your return under the old regime. So the first deduction which you get is ATC. Okay, now I'll cover ATC. I have already covered in one of my lecture. I think you might not attended some of them. It was Mananya was there. I remember, and there were very few students. We had an online lecture. Uh, so that video is available on the YouTube, but it is only the audio. But you can just open this file along with that and then understand. Okay. So section 80C is basically where you can invest your money. Okay. You can take an LIC policy. You can invest in public provident fund or a provident fund of your company. You can invest some money. Okay, so NSC you can buy national savings certificates. So this total exemption which is available is maximum 1,50,000 maximum. So even it can be less also. Suppose you have invested only 75,000, so you will get 75,000. Okay, but this is up to maximum 1,50,000. In case even if you have invested 2 lakhs, you will get maximum reduction of 1 lakh combined. Whether all the money which has been put by taking a life insurance policy or a public provident fund, or you have bought some national certificates, or you have contributed towards public provident fund, which is in your company, the employer also contribute, you also contribute. So the amount which you contribute is eligible for under section 80C. Then we have section 80CCC, all these exemptions. So there is an additional exemption up to 50,000 rupees, which is available under section 80CCD1B. Okay. So maximum deduction which will be available to you is up to 2 lakh rupees. So all this. So this is all 1,50,000. There's a combined limit for everything. Okay. Fine. Then we have section 80D, which is Mediclaim. So Pranav, can you read this 80D Mediclaim again? Now, this is, normally your parents, might have taken a policy, a hospitalization policy for entire family. You, I mean, your sister, if it is there, I mean, the spouse and the husband, I mean, your father and mother and your family. So they might have taken a policy. It's called a floater policy. Okay. Now, it is to cover in case if anybody, falls sick and he has to be hospitalized, then if you have taken a policy, then you don't have to pay money to the hospital. Hospital claims directly from the insurance company, but it will all depend upon what amount of policy you have taken. Suppose you have taken a policy like, I have taken a policy where I have, taken for about, I think, 50 lakh rupees. Okay. So for myself and my wife, because my son and my daughter have become now major, so they have their own families, so they have taken their own claim policy. So up to 50 lakh rupees, if I am admitted to a hospital, so even if the bill is 50 lakh rupees, it will be paid by the insurance company. So, but I'm paying a premium. The premium which I'm paying is around 1 lakh rupees. Okay. So, whatever premium I'm paying, you will be eligible for the reduction. But the premium is maximum 50,000 in case of senior citizen. But if you are, say, below 60, then maximum policy you can take is where you make a premium is 25,000. Okay. For yourself and your spouse and your children, 25,000 rupees per annum. Now, this amount can go to 50,000 in case if you are a 60 years old plus guy, okay, and if you are covering yourself and your wife and maybe your kids, okay. But if you are even also covering your old parents, then this maximum exemption can go up to 1 lakh rupees. But it comes with a lot of rules and regulations, so which we have covered in our last to last lecture. So you can just watch that, okay. So if you, but this deduction is available only under the old regime. But if you are a young guy, okay, then the exemption is only 25,000 for the entire family below 60. Is that okay? Pranav, have you followed this? Okay, just can you just sum up what is that? Okay, and even if he's above 60, he gets an exemption, but a higher exemption. So the maximum amount is 25,000 if you are below 60. Okay, so you can take a policy, insurance policy, and you pay this amount to an insurance company, and you will get an exemption up to 25,000. Okay, now in under this policy, what is covered, Pranav? I mean, how is the family gets benefited? Yeah, yeah, it is a yeah, yeah. Actually, it's an health insurance and not a life insurance. Okay, it is a health insurance. That means only hospitalization. When you're admitted, yeah, only hospitalization. Yeah, yeah. So this policy has become, now very costly after the COVID. Okay, because there were many claims which went to the insurance companies and they have checked up the prices of all these policies. So everybody is advised to take this policy in case of, because there is a lot of diseases which come across. So it is always better that you should take a policy. Okay. So many you might have, I mean, your parents might have taken a policy for the entire family. So you may be aware or not. Okay. What is it? The other one, Section 80G. Just read this. Now, sometimes people give donations, like National, Prime Minister Relief Fund. Now it is called PM Care Fund. Okay. And, a lot of people give, donations to charitable institutions like temples, gurudwaras, or blind schools. So you can donate. Okay. If you donate, then you pay by a check or online, then you are entitled for a deductions. Of course, there are rules to that. There's some rules. It is limited to 10% of your total income. Okay, suppose your income is 10 lakh rupees, so maximum donation, you can give any amount of donation, but the maximum reduction will be up to 1 lakh rupees. I'm just giving you an overall idea, but the rule is little bit difficult. I mean, you have to read them to just understand exactly what are the how it is calculated. But you can give donations to any institute and you can reduce your tax burden. Okay, suppose you have given a donation of 25,000 rupees, so you will be entitled for 25,000 rupees reduction in your tax liability. Okay, so then you have to work out like this. Okay, so then let's understand a question now. Okay, so we'll do this question. Okay, read this question, Pranav. Okay, just read this box. Okay, so now we just move on to the answer. Okay, so this is the answer. Okay, just I'll advise all of you to open this box, and the question will be there like this in your exam. So this is the format which you have to just remember it, and you can just put this format, and then there will be old regime and the new regime. Okay, so you have to just if you look, you have to just copy this from your question. Okay, and basic salary and sorry. So you have to just put a is equal to sign and then link with this basic salary, so it will appear here. And this also you can just copy from here. Okay, is that okay? So 6 lakhs is the basic salary which is given in the question. Then you have DNS allowance. So similarly, I have copied from my question DNS allowance. Okay, if you look at DNS allowance here, the DNS allowance is 50,000, which I have copied here. Okay, so 50,000 in both the cases. Similarly, bonus and commission 30,000 each. So this is also in the question. If you go back here, so it is 30,000 is bonus. And the next item is perquisite 20,000, which I have also copied. So 20,000 perquisites. Then you have other allowances, which I have also copied. Other allowances, okay. Other allowances, fine. Then you have HRA, okay. So under both the schemes, first it will be included. Okay, under the old scheme, you will get some exemption. Under the new scheme, you will not get any accommodation, even if you are staying in a rented accommodation. So this is coming from this part, 1,20,000 if you're paying HRA. So which is coming here. Okay. So your gross salary is how much? Pranav, is that clear? So, you have to first, what you have to do is from your question sheet, you have to copy all the things which are given. So, as per the old scheme and new scheme, we'll get exactly the same in this case. Okay, there is no difference up to now. Then, under the old scheme, you are entitled for exemptions because you are staying in a rented accommodation. You will get some exemption. The exemption is 85,000 rupees. I'll show you how it has been calculated. But under the new regime, there is no exemption. Okay, so how you calculate the exemption? It is given in the question one itself, and this thing. HRA received is how much? 1,20,000, which is I'm just going to show you the formula here. So it is coming here. So in the question, it is given that you are receiving an HRA of 1,20,000. So you just put it on the corner of side of the side, and then the formula here is, so before we calculate, we must know what are the HRA rules. Okay, just read the HRA rules, Pranav. Mananya, are you there? Who is there? Who can read? Nidhi? Okay, just read. Okay, just read the row number two. Okay, row number two here, mister. Should I make it little bolder? Okay, I'll just make it a little bolder. Okay, so that you can read it. Okay, yeah. Okay, now this exemption is only available under the old regime. In the new regime, all HRA which you are getting is fully taxable. But if you are staying in a rented accommodation, then you can claim the benefit, or you can, of this only under the new old scheme. So what is the formula? Read this. So that means you have to compute three numbers. Actual HRA, what you're getting. Second, 50 personal salary if you're staying in Mumbai, Delhi, Calcutta, Delhi, all the metros. But if you're not staying in these cities, then only 40 personal salary. Then rent paid, how much rent you are paid? Minus 10% of your salary. Okay. So the least of the amount of this will be exempt. Okay. Now here, what is the meaning of your salary? Okay. Meaning of salary for calculating 50% or 10%. Okay. Read this. All this will become, you have to just add them up: basic salary, DNS allowance, okay, and the commission. Okay. If it is fixed percentage of turnover, like you're getting 1%, 2%, 3% of the sale, what you're doing. So in that case, you just add this all these figures and then calculate, this 10% of the salary and 50% of the salary is based on these calculations. Okay. So let's do small example. Okay. Example. Just read this example. DA forming part, oh yeah, DA forming part of the retirement benefit it is. Okay, it's missed out here. 5,000. Okay. Then, okay, so first we are going to calculate all the numbers. Okay, read this. Okay, then, okay, which is given in the question itself. Yeah. Then, okay, so which is been computed from here. Okay. So now what we have done is that we have to calculate the three limits. Actual HRA, just read this. Read this exemption limit. So that means this is one. The first figure is 1,80,000. Actual HRA receipt. 40% of a salary is 2,16,000. Rent paid minus 10% of salary is 1,62,000. So which is the least, Nirdi, out of the three numbers? Rent paid minus 10%. So that means this will be exempt. Okay. So that means how much will be taxable? This. How much you're getting? 1,80,000. And how much is this amount? So that means you have to pay tax only on 18,000. Okay. Fine. So which I have calculated here. Okay. Fine. So this has been calculated. Do you understand that now? So first of all, we have to calculate these three numbers, and then the least will be exempt. So how much you are getting? So this will be your taxable HRA. Taxable HRA. Okay, which will be 18,000. You are getting how much? 1,80,000. The least number is 1,60,000, so that is exempt. So how much you have to pay tax on? 18,000. So 18,000 will be included in your salary, and you have to pay tax under the new old regime. Is it okay? So, in case if you have not followed fully, you can just again go through this example so you will be able to understand. But there are certain conditions to claim HRA. What are those? You must pay rent. It is not, you can't claim this deduction if you're not paying rent. Second, okay, so you should be living in a rented house. That's the second one. Third, now you have to get a rent receipt from your landlord. And in case if the income tax officer asks you to submit that proof, so you have to submit. Okay, only in case if they require it. Otherwise, you must keep that for your records. In case if income tax department you get a notice and they ask you, you have to submit. The fourth, so suppose if the rent exceeds 1 lakh, annual rent, that means, mostly all the cases you will be requiring the PAN of the landlord. Suppose you are staying in an accommodation where you are paying 25,000 rupees rent. So would you require a PAN for the landlord or not? Nidhi, I'm asking this question. Suppose you are paying 20, yeah. 25,000 per month. Because then it will come to 3 lakh rupees. Okay, the rent will be 3 lakh. So that means you have to get the PAN number of the landlord. So what all you require? You have to get a rent receipt. You have to should have a PAN number of the landlord, and you must be paying rent. So you have to pay rent through a bank account or a check or whatever. In case you are paying in cash, you must get a receipt from the landlord to prove that. Okay, fine. So this is all required, and you can just go through this HRA rules by yourself to understand. But we will use this in our question now. Okay. So now we come back to the question where we have calculated how we have calculated. So here, how much rent you have received? 1,20,000. Nirdi? Okay. Now the second would be to calculate rent minus 10% of the salary. Okay. So here the rent paid is how much? 1,50,000. So here it is coming somewhere at this thing, how much rent you are paying. Rent paid is 1,50,000. Okay. Fine. So there I have just put this here. Rent paid is 1,50,000. Rent paid. Okay. So I have not given this thing. So I can just put 1,50,000 here. Okay. So this amount is coming from no, this amount is coming from here, this place. Rent paid. And where you are staying? Which place you are staying? Delhi. Okay. Now, of course, this will be the third figure, okay, where you have to calculate 50% of the salary. Okay. So 50% of salary comes to 3,25,000. How it has been calculated? Basically, so you have included your salary. Salary is, I'll just touch that. So rent paid minus 10% of the salary. How much rent you are paying? 1,50,000. And 10% of salary is 65,000. How you have calculated? I'll just show you the question here. Okay. The question is uh, here. So this is the basic salary and HRA. Okay. If you add them, so that will become your 6,50,000. Okay. Fine. So you don't have to include bonus. Only basic salary, DNS allowance, or a commission. Okay. If you go back to the HRA rules, so if you just see the rules, it is mentioned that 50% for the purpose of the salary, the salary means the salary includes basic salary, DNS allowance, and commission. So these three things are included for calculating that 50% and 10%. Okay. So in our question, only basic salary and pay is given, and there is no commission. So that's why we have calculated here, the HRA here. It is given in the question. Sorry. Okay. So here, so let's visit again. How much is the HRA we have, the guy is receiving? This person. What is his name? His name is Rohan. So how much HRA he is receiving? 1,20,000. Okay. How much rent is paying? Now he is getting an HRA of 1,20,000, but he's paying rent more than what he's getting from his employer, isn't it? So normally, in such case, he should be fully exempt. Normally the logic says that if you are paying more rent than what you are getting from your employer, you should be fully exempt from the HRA. But that is not the case. The Income Tax Act says that the least of the three numbers. First is whatever rent you are receiving. The second, it is rent paid, which is 1,50,000 minus 10% of the salary, which is 6,50,000. 10% comes to 65,000. So 85,000 will be rent paid minus 10% of salary, and then 50% of the salary, which is 6,50,000 whole amount. 50% is 3,25,000. So least is how much? 85,000. So out of all these three, the least is 85,000. That means this will be exempt. So how much will be taxable? 35,000. So because you are getting, 1 lakh, 1 lakh, how much you're getting? 1,20,000. Okay. So 1,20,000 minus 85,000, it comes to 35,000 here. Okay. So I can just show you the formula here. So it is this. This is basically, I'll first remove all these formulas and then show you this here. So this is, exemption you're getting basically. This is basically the exemption, which is the how much rent you are getting from your employer, 1,20,000, and how much is the exempt? 35,000. which is the least number of the three numbers which you have calculated. Okay, fine. So the 85,000 is the least amount. So that means 1,20,000 minus 85,000. So that means 35,000 will become taxable in your hands. How much is exempt? 85,000, isn't it? So now we go to the question back and put this amount here. Okay. So here, we are going to put all the amounts first. Okay. Fine. And then we are going to put the exemption here, 85,000. Okay. Which is coming from Q1 M34. So which has been, I have just given a cell reference here, 85,000, which is coming here. So I have put the number from here. This 85,000 has been put here. Okay. So he's getting how much? 1,20,000, 85,000 is exempt. So that means balance will become taxable. So this is the exemption what he's getting. Okay. So then there is no LTA. It is not given in this question. So there is no LTA given, no transport allowance given. So the net salary will be 7,75,000. Okay. In the old regime. So in this regime, up to the level of gross salary, it's same. But in case of an old regime, if you are staying in a rented accommodation, then you will get an exemption for the rent you have paid. So there will be not all HRA will become taxable. Up to certain amount, you will get exemption. So we have given the exemption, and the net salary will now differ in both the cases. Under the old regime, how much is the amount, Nidhi? Under the new regime, how much is the amount? Now, what is the why there is a what is the difference? Why the difference is coming in the new regime? Absolutely. So, in case of a new regime, even if you're staying in a rented accommodation, paying rent, you will not be entitled for this exemption. But if you choose an old scheme and if you're paying a rent and you're also getting a rent allowance, so then your income will get reduced. So it's good that if you choose an old scheme here, let's work out and find which is the best one. But we will, do some more calculations. So, okay, income from other sources, which is 25,000. So if you see the question, it is mentioned that there is some other income which the person is earning. Okay. So what is the other income? Income from other sources, 25,000. Okay. So which can be, like fixed deposit interest or anything. Okay. So which will not be mentioned. So we are just going to simply add this up. Okay. So we are going to add this up. So what is now the gross total income? 8 lakhs in case of the old regime and 8,85,000 in case of the new regime. Is it clear here? And now, then there are certain reductions like standard deduction, which is applicable both in the old regime as well as new regime, which is 50,000. Whether you are in old regime or new regime, you will be getting that standard deduction. Okay, fine. And then professional tax. Suppose if you are paying a professional tax, because in the question it is given that you are paying a professional tax here, 2,500. Okay, so I'm just going to remove this. So you are paying some professional tax. Okay, how much is the amount you are paying as a professional tax? Now, this is paid in each state to the state government. Okay. Now, if you pay this amount, then under the old regime, you can claim that deduction. So that will reduce your income. But in the new regime, you can't claim this amount. Okay. So the total deductions which will be applicable to you will be 52,500 in case of the old regime, and the new regime it will be 50,000. So why the difference of 2,500? Nirdi? Absolutely. So in the new regime, you are not allowed for that deduction. But in the old regime, you are allowed for a deduction if you are paying some tax to the government. Okay, so that will be allowed. So your income, I will advise you just go to ChatGPT or Google and find what is professional tax. Okay, but just to give an idea that in every state, when you are working in any state, so all the states have a professional tax, which is a tax which is collected from all the salaried people in that state. Okay, and that may be around say 2,200 rupees or per month or 250 rupees per month. I don't know what is the amount now, but I used to pay around 200 or 250 rupees per month to the state government, and it was directly paid by my employer. Okay, and deducted from my salary. So I don't have to bother it. Normally, your employer, where the company where you're working, they are going to pay this tax on your behalf and make a deduction from your salary every month. Okay, and it's a very small amount of say 200 or 250 rupees. But while furnishing your return, you can claim this as a deduction in the old regime. But in the new regime, the government says you're not entitled for this deduction. Is that okay? Okay. So that means your income under the head salaries will be how much? 7 lakh 45,000 and 8 lakhs this thing. Okay. Is that okay? So income from other sources. So income from other sources. Actually, this figure, income from other sources, should have been this figure should have been mentioned here. Okay. So I'm not making a change, but this figure should be changed. Okay. It will not make any difference in tax calculation, but income from other sources should be coming. This 25,000 should be cut from here and pasted here. Okay. I'm not doing it at the moment. So you can do it, but I will make a change and then again share the Excel sheet. Okay. Fine. So then when you arrive at a gross, because this is under the head salaries. So income under the head salaries. Now this also includes income from other sources, actually, which is a separate head. So that's why it will come as a separate head here. It should not be included in the salary. Okay. This is coming from other sources. So that is the mistake which I have committed. So this will be shown under income from other sources and not shown as income from the head salaries. Okay. Fine. So now you are entitled for deductions. Okay. Read this. Now, reductions under chapter 6A. Okay, fine. So it is called chapter 6A. The first one is what? What are you reading? Okay. So how much is the amount coming here? So what I'll do, I'll just put a cursor here, go to the question and pick up the numbers from here. So what is the amount here? LIC. Okay, LIC here, and then add the PPF here. Fine. So and then put the number here. So this number has come from here. This thing, LIC and PPF. Okay, this is where he is investing. Then Mediclaim. How much is the amount? So it is coming from here. Question number 20,000 is the medical insurance. Okay, medical insurance how much? 20,000. Okay, so he's taken a medical cover for his family, and medical cover is basically a hospitalization cover. In case if you're hospitalized, then if you make a premium to an insurance company, then the insurance company is going to settle the bill with the hospital, so you don't have to pay the hospital bill if you're taken a policy. But there are some limits for that. It depends upon the policy which you have taken. So what is the total income now? The total income will be, because you have got all these deductions, 1,30,000, 20,000. So the deductions are like this. If you can just, see the formula. So that you have got some deductions. So your total income, which is higher under the old scheme or new scheme? The new scheme, the total income, taxable income is 8,35,000. Under the new scheme, under the old scheme, it is 5,97,000. So now you calculate the tax. I'll just show you how the tax has been calculated. So the is coming to 33,280. In this case, it is coming, in the new scheme, it is coming to 34,840. Now, before we plunge into and find out how the tax has been calculated, so which scheme is more beneficial, old scheme or new scheme? Nidhi? No, finally, once you have calculated the taxable income, okay, so the taxable income in case under the old scheme is 5,97,000. In the new scheme, it is 8,35,000. Okay, so you calculate tax. Now, I told you under the new scheme, you have to pay less percentage of tax, so it is coming 34,000. Under the old scheme, you have to pay more tax on a small income, so it comes to 33,000. Okay, now you have calculated the tax for both. So I'll just show you here. Okay, under the new regime, it is that on the first 3 lakhs, no tax. On the next, between 3 to 7 lakhs, 4 lakh, the tax is 5%. Okay, so that is 20%, 20,000. Then the remaining amount, which is basically, this is the new regime, so 8,35,000 minus. So this amount, if you add up, it will come to 8,35,000. Okay. Fine. So on 8,35,000, you have calculated tax of 20,000 and 13,500 based on the slab rates. So the tax comes to 33,500. You add 4% cess, so it comes to 34,000. And if you look here, then you can just find the tax has been calculated like this. Is that okay? So if we just go back to this, on the first 3 lakhs, no tax. Then from 3 to 7 lakhs, the difference is 4 lakhs. You have to pay 5%. So 5% of 4 lakhs is 20,000. Then anything above, 4 lakhs, that means anything above 7 lakhs, then between 10 lakhs, you have to pay 10%. So in this case, because your income is only 8,35,000, so the income which is in excess is 1,35,000. So which makes your total income on that you have to pay 10%, which is 13,500. So that means your total tax liability will be 33,000 plus 4% surcharge, which I have written here. Is this clear? Now you have to calculate tax under the old regime. Now under the old regime, let's go to this slab rates. Now the slab rate says up to 2,50,000 nil tax. Okay. So you don't have to pay up to 1 lakh, 2,50,000, then 2,50,000 to 5 lakhs, 5%. So that means up to 2,50,000, 5%. So that means 12,500, which is this. 2,50,000, 5% of 2,50,000 is 12,500. Then we come to the balance because your income is how much? 5,97,000. So you have to calculate the balance here, which is, if you just, so this is basically, if you look at the formula, so which is basically, which has been calculated like, what is your total income minus all this, slabs. So you get 97,000 here. So I'm just going to remove first all this thing and again show you. So this is like this. So your income was how much? Under the old scheme, 5,97,500. So how you're going to calculate the tax, which will be all this amount, if you add up, it will become 5,97,500. If you can, I can just make a calculation here also. So it comes to 5,97,000. Okay. How much is the tax? Altogether, 32,000 and 4% surcharge. So it is 33,280. And I have put this number here, 33,280. I'm just removing this formula here. And then I'm just going to show how it has been calculated. So that it has been calculated here. Okay. Fine. Is that okay? Now you have to just find out which is the better scheme, the old scheme or the new scheme. So that means while furnishing your return, you can choose this scheme, okay, instead of this. But you have to make a plan because if you want to choose the old scheme, then you have to invest the money in LIC, Provident Fund, or take up medical claim. You always take cover. Okay, so you have to just make some calculations to find which is a beneficial scheme for you. Okay, and choose that scheme and file your return. Is that okay? Fine. So we are going to now end the lecture here. And I have just recorded this lecture. Let me see if it's got covered. Run for 52.